It's Thursday and the markets go straight up. My name's Des here at Grok Trade, Thursday, January 29th, 2015, and the Dow goes northbound 225 points, thumbing its nose at yesterday's huge drop. You have the S&P up 0.95%, the Dow up 1.31%, doing the best out of all major indices. The Nasdaq just shy of 1%, and Russell's up 1.3%. Banks up 1.4%, giving great support to today's bullish movement. VIX down a staggering 8.22%. Big drop on the fear. Gold, though, check this out, down 2.16%. Silver down almost 6%. Huge drop in precious metals today, with crude oil going higher 0.72%, with the US dollar basically break even. Utilities index up at 1.4%. And that should give you an indication and an indicator to uncertainty out there. And here we are looking at the S&P 500. Yesterday I told you, man, big warning, man, we broke a support line. We had one more support line. If we break that, we are in trouble. And today, Wayne, I was gearing up to go big time short when we broke this trend line, especially when we busted that low right here. When we got past this 1993, great year by the way. When we got past that area right there, then I saw buyers starting to come flooding back in, and it started rising. So at that moment I thought, you know what, no way I'm going to load up on short. So what I did do was get rid of that hedge that I had and started picking up longs again, especially on the tech side. So I picked up some longs and the market popped here. Here's the bottom line. Look at this symmetrical triangle. Look at all the moving averages. Anytime the price action gets caught up in all these moving averages, it is a choppy, churning mess. It's a consolidation of a trading range being pinched going into this apex. So I'm going to get rid of this line now. We have those two lines that we're dealing with right now. I expect a lot of choppiness right here. The markets need to make a decisive move down below that trend line or above for us to get any traction one way or the other. If you look at the weekly chart, look at this. Red, white, red. Dollars to donuts, guys. We'll have a white one next week right there, and that will be building a low base formation. So a low base, we go higher, 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 low, 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 low base, low base formation, which is more bearish and is bullish. The problem here with this being so bearish is every time we try to go low, you can see these lower shadows, people buy into that strength. Very interesting to see. So with that quick look here at the Nasdaq, we're still inside this triangle. At one point today, we broke that trend line, but we came right back into it. So the trend line is intact and all the moving averages are coiling in. Gang, expect a huge move within the next couple weeks. And I think it could happen next week. Textbooks will tell you we should expect the breakout anytime now, but I think a lot of times I'll see these triangles, price action go into the apex further and deeper. So that's why I'm not so antsy to say it's going to happen anytime really soon, although it certainly could. Banks been looking for buy opportunities and crash. Big pop on big volume. This thing could pull back a little more here, but I just don't like the volume on the sell side. And same thing with, look at just huge volume spike on the sell side on silver, just crash. Not good for buying opportunities now. Bad news. Apple up 3% today after yesterday's earnings, doing exceptionally well. And by the way, I do hold that as a disclaimer. And Amazon was up almost 3% today, and it just had earnings. Now, I held over earnings on Amazon. I did not on Baba. And let's see here, AMZN. And we're going to go to a 1 minute chart, and it's up 336 right now, 336. And it closed at 311, so it's trading about right here near this resistance area. I'll see if I will continue to hold my position in Amazon or not. And by the way, you have to have very advanced strategic skills and a system in place to be able to trade earnings like I'm doing here. You certainly need to know what you're doing and how to manage it if it does go against you. You got to have a contingency plan. So I do not at all recommend it. We teach our students not to hold over earnings. And BABA, they missed. So the big drop here. They're at $89. And yesterday I was holding this, I was trying to hold it, and I knew earnings was coming. Didn't like what I was seeing. Bailed out when we got below the century mark, the $100 mark. And if I go to a 1 minute chart, 89, it's trading about there. But Google missed. So right now it closed at 510 and some change, 510. It looks like a nice bull pullback with the Dragonfly Doji. You want to buy that, right? With big volume? No, not right before earnings, and here's why. 510 is now at under $500, is at 498. So we closed here, now we're here. So a 10-point haircut for Google, and that is it, man. I have been working until the wee hours of the morning on this super duper uber cool website. I cannot wait to show this dude to you this weekend. I also have a special page on it. The Easter egg, it's a special link. If you can find it, very few of you will be able to find it, but if you do, I think I'm going to give you this week's V-newsletter, all the stock picks, so you can make a lot of money on us. And that's just by being able to find that. So we'll talk more about that later. So anyway, crazy market we're in. Expect a lot of choppiness going into the future here. And if you don't know how to hedge, certainly look to do that soon.